Hey, it's Jennifer Lahan with Lahan Home Team and eXp Realty, and I am here with your monthly market update. This month, we're going to be looking at all of up till May and looking at the real estate data, see what's going on nationally and in Orlando. Let's first look nationally. We're going to look at buyer traffic and seller traffic. So check it out. Look at the buyer traffic right now. This is going on throughout the country. It is strong just about everywhere. And you've got, except Delaware, if you look at Delaware, it's a little weak there. That's the only state. So you might want to move there, but otherwise, buyer traffic is heavy everywhere. But now let's look at the seller traffic. Check that out. Seller traffic is pretty much very weak everywhere except West Virginia. They seem to be doing better in that aspect. But if you know, this is why we're in a seller's market right now. We have so many buyers and not enough sellers. Let's keep moving on. So what is Realtor.com saying? In this Wild West environment, buyers are doing anything they can to stand out. And more, all cash offers do just that and can mean the difference between getting that dream home or winding up empty-handed again. Let's look at the month's inventory sale over the last 12 months. Now, if you look, May did pretty well, right, last year? And this year, it's going down. We've got up till April right now, but it's slowly starting to be a little more, but still nothing like we had last year in inventory. And if you remember, as we got towards the end of last year, the inventory started going way down. So if you look at December and January, that's what we were dealing with. What about home price forecasts going on for 2021? Well, we've got the different groups. We've got MBA, Fannie Mae, we even have Freddie Mac. And if we average all of those, we're looking at about 8.2% average for all the forecasts. So not too bad. And Bill McBride says that if inventory increases slowly, house prices will continue to rise rapidly. And if inventory increases sharply, house price growth will slow down. So that's kind of what we're looking at right now, right? It's your basic economics 101 class, supply and demand. So that's kind of what's making, because of the demand and the low supply, that is what's causing the house prices to rise. Robert Dietz says that the decline in single-family permits indicates that builders are slowing construction activity as costs rise. If you remember that lumber prices have gone up a lot over the last several months. While housing starts were strong at the beginning of the year due to home builders constructing homes that were sold pre-construction, higher costs and limited availability of building materials have now paused some projects. And then we have strong conviction that we are not experiencing a bubble in the U.S. We are not at all suggesting that home price appreciation will maintain its current torrid pace. Home prices will continue to rise, but maybe more gradually. So in other words, yes, they did have a sharp rise, but our hope is that it's going to eventually start to steady, right? And not increase as sharply as it's been. Let's talk about housing affordability. The housing affordability on a year-over-year basis declined in March for the first time since January of 2019, ending a more than 2-year streak of rising affordability. House buying power is likely to remain robust in the months to come, but affordability trends will likely hinge on changes in nominal house price appreciation. So again, this is what we have to keep an eye out for when we're looking at the appreciation. And here's another one by Mark Fleming. Looking back at the bubble years, house prices exceeded house buying power in 2006 nationally. But today, house buying power is nearly twice as high as the median sale price nationally. Many find it hard to believe, but housing is actually undervalued in most markets, and the gap between house buying power and sale prices indicates there's room for further house price growth in the months to come. So here's your housing affordability index. This starts all the way back. So the very first line is from 1990. And then we go up today. Now look at that. In 1990, that was the house affordability index. Now go to 2009 to 2015. Look at those are the years when we had distressed properties, right? They were dominating the market at that time. And now look at this year today. We have a good housing affordability index. So we're doing well right now. And what is the percent of median income needed to purchase a median priced home? Again, we're doing great. Look at 85 to 2000. You've got 21.2%. Then 2006, we all know that time, right? That's 25.4%. But look at now, 14.4%. Again, good indications. This is what we want to see. Contrary to popular belief, owning one's own home is frequently more affordable than renting. It is cheaper to buy a home than it is to rent in 2/3 of American counties. And I can tell you that's true for Orlando. When I'm looking at the renting, we're renting right now temporarily while we're building a home, and our rent is actually higher for a much smaller, older home than what our mortgage is going to be when our house is finished. Now, let's also talk about equity. There's been a lot of good equity in the homes right now. So right now, if you look over here, let me just go back. If you look at this chart, you've got 17.8 million residential properties with a mortgage where equity rich, at least 50% equity. Now look down here, 31.9% residential properties with a mortgage where equity rich, at least 50% equity. And then we've got the 38% of all homes that are owned free and clear, meaning they don't have a mortgage. Now let's talk about top financial institutions' advice. So what are these top financial institutions telling us? Well, JP Morgan says that home buyers, interest rates are still historically low, though they are inching up. Housing prices have spiked during the last 6 to 9 months, but we don't expect them to fall soon, and we believe they are more likely to keep rising. If you are looking to purchase a new home, conditions now may be better than 12 months. Hence, those who remember the housing bubble of 2006-2007, which I definitely remember that one, may be nervous watching U.S. housing prices soar now. But the previous bubble was fueled by speculative buying, which we do not think is the case today. Merrill Lynch. There are reasons to believe that this is likely due to be an unusually long and strong housing expansion. Demand is very strong because the biggest demographic cohort in history is moving through the household formation and peak home buying stages of its life cycle. Coronavirus-related preferences changes have also sharply boosted home buying demand. At the same time, supply is unusually tight, with available homes for sale at record low levels. Double-digit price gains are rationing the supply. Goldman Sachs, right? Strong demand for housing looks sustainable. Even before the pandemic, demographic tailwinds and historically low mortgage rates had pushed demand to high levels. Consumer surveys indicate that household buying intentions are now the highest in 20 years. As a result, the model projects double-digit price gains both this year and next. And Morgan Stanley, unlike 15 years ago, the euphoria in today's home prices comes down to the simple logic of supply and demand. Like I had mentioned before, the whole, your basic economics 101 class. And we at Morgan Stanley conclude that this time the sector is on a sustainably sturdy foundation. This robust demand and highly challenged supply, along with tight mortgage lending standards, may continue to bode well for home prices. Higher interest rates and post-pandemic moves could likely slow the pace of appreciation, but the upward trajectory remains very much on course. Now look at America's choice of best long-term investments. If you look at this, you've got real estate, you've got the gold, you've got bonds. Real estate is at 41%. It's still the highest for long-term investment choices. Let's look at sales. This is nationally looking at the average days on the market. There is not much differentiation, is there? United States has an average day, it's just 17 days. I've seen homes pending within 1 to 2 days. You've got they're not on the market a lot, and that's because of the demand that we've got going on right now. And look at existing home sales. In the US, you're about 33.9%, but look at the Midwest. That's 13.2%. So that's the lowest right now, but then the West has the highest right now at 53.8%. And the South seems to be doing pretty good too. Now, I just skipped one. Look at new home sales. The dark blue is 2019. Then the medium blue is 2020. With the light blue, right, the lightest blue here, is 2021. So if you're looking at the new home sales, since I would say the second half of 2020, that is when they started to explode, and they're still doing very well. New homes are selling fast. Look at the median months from completion to sold. Now this starts all the way back, if you want to know where it's starting, January of 2018. And then we're going all the way through April of 2021. And if you look at March, let me see if I can do it over here. March did very, very well with the new home sales. But what about existing home prices? Existing home prices, those have also gone up a lot. And this is year over year. So the US overall was 19.1%. You can see that the Northeast actually has done the best with that part. And then the Midwest, again, that's about similar to what we just saw on the previous slide. Interest rates, always got to talk about interest rates, right? So with interest rates, the mortgage rate projections here, if you're looking at right now the third quarter of this year, we're averaging about 3.22%. That's again, these are projections. And if you look at, I'm going to go all the way down to 2022, so next year, second quarter, they're projecting that it'll get up to about 3.6%. Now, yes, that is higher than what it is now, but it is still exceptionally good mortgage rates. What about, are we looking at here? So let's look at the actual, so that's your dark blue, and what's going to be projected, that's your lighter blue. So up in 2018, if anybody remembers back in 2018, that's where we had the peak over the last several years. We got up to in the 4.8 or so interest rates. But now we had historically low, if you look at that dip down here, in the fourth quarter of 2020. And if you notice the last 2 quarters of this year, we've slowly started to go up a little bit, but it's been slow. And they're projecting still an increase all the way through 2022, but yet we're not predicting up to even what 2018 was yet. What about FICO scores? I know that a lot of people always ask, well, if I get an FHA, I've got this FICO score. What do I need to get a conventional? These are the average FICO scores right now nationally for closed loans. So these are loans that have already closed, and what were the average FICO scores? So for example, if you look at a conventional, the average was 759. That means some were higher, some were lower. FHA was 679 and VA 723. All right, now let's talk about the update. What update am I talking about? The Orlando update. So let me go back and let's start with the Orlando sales. Again, these are the number of sales that we had each month. So how many homes sold during that particular month? The blue is your 2020 as always, and the orange is 2021. Now look at what's been going on this year, 2021. Yes, we have had more sales than we did last year at this time. But notice in March, so over here, this is kind of where we've peaked so far this year. April, we had some less sales. And May, we had even less sales. Still more than we did last year. But notice that we have had a decline with the sales. And now let's look at the next slide, which is going to be, and like I said, my PowerPoint never behaves when I do the videos, right? It's annoying. But anyway, now let's look at the average sale price because you can't see it because it was so subtle, but I'm going to explain it. Now, average sale price, let's go to this year. We're starting in January, right, the orange. And each month, all the way up until April, the average sale price increased. It was higher each month. Now, this is the average, when I say average sale price, it's not the average listing price. It's what the average home sold at, right? But April, or May, sorry, right here, May, you can't see it. unless I'm... Would you believe my internet stopped right in the middle of this? So I'm going to keep going. Again, as I was saying, you can't see it very well in this graph, but the May average sale price was slightly lower than the April average sale price. So even though we've seen an increase all the way up until April, May was slightly lower. And who knows what we're going to see now through the summer months when it comes to the average sale price. Well, that ends it for as far as the market goes, but I did mention last month that these were coming out and now they are here. We do have buyer and seller guides specifically for this summer. So if you'd like a copy, it's completely free. Just call or email us and we will send you your buyer's or seller's guide, depending on which one you're looking for, or you might be looking for both. If you have any questions about the Orlando real estate market, please feel free to call us or email us, or you can visit our website at lahanhometeam.com. Enjoy the rest of your week.